Good morning, viewers, and welcome as we continue our conversations around economics and the Nigerian economic discourse. With me to continue this conversation is Dr. Ayo Teriba, the CEO, Economic Associates. Dr. Teriba, it's nice to have you this morning. And a happy Easter Monday to you. Yes.
Happy Easter.
Yes. As we continue to reflect on the COVID-19 pandemic and its implications, we just like to start with the global developments and the realities. How is this beginning to impact the Nigerian economy from your perspective?
Right. There are two sides to the story. There is the pandemic itself, and there is the fallout from the pandemic. Until the last week of February, the pandemic happened elsewhere. Nigeria had news, video of what was happening elsewhere. The virus came into the last week of February. So the pandemic proper, arrived Nigeria only 6 weeks ago. But some of the social, economic, and political consequences of the pandemic arrived Nigeria ahead of the pandemic. For example, the depression of the price of oil, or the sell-off in the stock market, the capital flight, and the social, the fear, the anxieties, the uncertainties, that led to social distancing, that led to people rushing to buy sanitizers, which nose masks, which led the prices to shoot up in Nigeria weeks before the first case was confirmed in Nigeria. So, the good thing about the situation, both the pandemic and the fallout, which results in lockdown. So 6 weeks after the pandemic arrived in Nigeria, we've been in lockdown now for about 3 weeks.
Yes.
And the numbers of those who are testing positive has risen above 300 now.
Yeah.
Thankfully, the casualties are still about 10, which is good. So Nigeria has taken necessary precautions. We didn't close, we didn't shut down ahead of the arrival of the initial cases, but we did shut down rapidly after that event arrived. The pandemic arrived Nigeria about a week before it arrived the United States of America. And if you can see what the number of casualties are in the United States and the number of fatalities, you will have to thank God that Nigeria did not go on in that trajectory.
The direction, yes.
However, the pandemic and the resulting lockdown, we must emphasize, are temporary.
Yeah.
Temporary. They are not likely to last forever. Take the test case where this all began. Russia was locked down for only 3 months. Sorry, I didn't mean Russia. China was locked down for only 3 months, and they are now open. So you may want to say that the other parts of the world where this has spread to, China, we can also expect that, in lockdown, plus or minus a month, maybe, those who learn will be able to shorten the period. Those who are a bit slower to learn might see it longer. But the most likely development is that this is going to be short term. But there are a lot of uncertainty about whether every country will be able to exit the way China has exited, or whether you get second round even in China itself. or it will be protracted in some countries, and it might be a year rather than a quarter. So while the pandemic and down here to contain it is with us. The reason why you get a lockdown is that there are no vaccines, there are no known remedies. So there is no cure, there is no prevention. The only way you can avoid it spreading is isolating or quarantining the now, when we are able to see past the peak, of the pandemic within Nigeria, and we see that the number of new cases are dying off, and those recovering, which we may be able to end the lockdown. So, but while the lockdown lasts, it's a cost that Nigeria has lost 3 weeks to the indication that we might be in the lockdown for another longer, maybe till end of April. Let's hope that by then it can, and then we too will be able to reopen.
Okay, Doctor, let's look at the likely post-COVID-19 lockdown scenarios.
Expected policy responses. What will you be expecting in terms of those policy responses, fiscal and monetary?
Those fiscal and monetary.
Right. Best way to do that is to the period before the pandemic with the period of the pandemic, and then ask what's likely to change in the post-pandemic scenario. Now, prior to the pandemic, was characterized by a widening divergence between the economic and financial parts. The world economy the growth has been slowing. Trade has declining. That's the economy, the real side of the world economy has sluggish since the second half of 2014, when the prices collapsed at the time. Largely because of supply gluts, technologically driven gluts. The world now knows how to produce more oil than the world needs. Through the shale technology, the world now knows how to produce more food than the world needs. Through genetic modification, the world now knows how to produce more livestock than the world needs. So that created a glut that slowed down trade and world growth. Now, but then growth and trade are destroying. Expose them. Only the fact that The response of major countries to this lockdown is to throw money at it. You know, the IMF managing director during the week, during last week, injected by governments around the world to fight the pandemic was in excess of $8 trillion US. And that's 10% of world GDP. So the lockdown wasn't the slowdown of trade and growth, that actually caused them. And that the lockdown has boosted the global liquidity situation. And the situation where people, where 8 trillion now are being shelled out by governments, so people who can leave their homes, who can travel, who can trade, who can walk. They're too afraid to spend it right away because the fear of they may become sick and need the money, the fear they may lose their job and need the money, all sorts of fears. So that's the lockdown situation. The lockdown in which now ends. Lockdown, the activity that has frozen will begin to devote gradually. The liquidity glut will impact the system immediately. I'm looking for more green shoots in terms of capital inflows in a post-lockdown environment. The recovery of goods and trade will be fairly sluggish. They would recover, but the liquidity source, so any country that sits down and strategizes well during this lockdown and puts its act together will get a good share.
So you've talked about the sluggish growth and of course the impact it will have, but we'd like to know the implications in terms of Q1 and Q2 for this year. What are you seeing as the projections for the growth as it concerns Sub-Saharan Africa and Nigeria, and how will this impact businesses and the households particularly?
Well, Q1 for Nigeria is, as you said, the pandemic arrived late February. But ahead of the pandemic, we've had the fallouts, low oil price, travel restrictions, social distancing, anxiety, and fear. So you definitely would know that the first quarter economic activity would have been negatively, adversely affected by both the fallout of the pandemic and the pandemic itself. And now before the end of March, we locked down. Now we're in April. Now, what's going to happen in the second quarter is largely uncertain, because if we are able to end the lockdown in Nigeria, if the conditions permit us to end the lockdown in Nigeria at any point before the end of April or by the end of April, it means it's only 1 month in the second quarter that is being affected, by the frozen activity resulting from the lockdown. So the remaining 2 months, May and June, might see a recovery in activity. So I'm not writing quarter 2 off because of the uncertainty. You could say, you should be thinking about it in terms of scenarios. If we are able to exit at some point in April, then the positive scenario is that when things pick up, you may have a resultant growth, that will even be better than Q2 of last year. That's one scenario. Now, if lockdown is contracted, we can't open up anytime in April, and it has to drift into May, which is the scenario. then you may also say the same that the first quarter will be before the second quarter.
When you look at the growth scenarios and the challenges we're seeing, particularly the International Monetary Fund talking about recession and developing economies, emerging markets like Nigeria, amongst those that will likely face that risk, what would you be recommending in terms of counter policy measures? What are those counter policy measures we need at this time?
Well, you have to be careful. We've identified 3 periods: pre-lockdown, lockdown, and post-lockdown. You cannot do anything within the lockdown beyond palliatives, beyond cushioning, the adverse impacts of the lockdown, distributing food and money to people who are forced to remain indoor. That's the most you can do in this lockdown. Now, pre-lockdown, so you may want to look at, it's like a football match in which the pre-lockdown period was your first half, and the post-lockdown period is the second half, and the lockdown itself is the half. So you can't try to score goals during that time. Question on policies. Now is the time to reflect, on how you make scoring opportunities in the first half, and prepare the strategize, change your tactics for ensuring that the goals that you failed to score in the first half can be scored in the second half. And your plan has to basically be aligned with global reality, in which the divergence, financial and economic divergence, has been widened. So it was difficult to raise export revenues prior to the lockdown. It's going to be more difficult to do so post-lockdown. It was easy to get capital inflow prior to the lockdown. It will be easier to get capital inflows post-lockdown. So Nigeria missed opportunities to get capital inflows, like many of our counterparts did. So Nigeria should put its act together now on how it could attract capital inflows to the sectors that can absorb them. And Nigeria has about 3 or 4 major groups of assets which you can attract into. So now is the time to think about that and set forth early on the breaking the down. Move very fast.
Okay, so you said that in terms of policy, we're looking at the global scenario.
The Bank of England, even the Fed, have reduced interest rates and seen ways they can intervene. But here in Nigeria, the central bank has continued to keep interest rate at this level, which is still high. So are you saying that there should be no steps taken in that regard in terms of ways to stimulate economic activities at this time?
Yeah, you don't have monetary policy space in Nigeria, and you don't have fiscal policy space either, because of external illiquidity. The fact that reserves are low and the low oil price threatens that reserves will become lower means that the central bank is rendered, unable to move any of its policy levers. You can't cut rates. If you do, it's going to spill over into the foreign exchange market, and demand for forex will soar at a time when you evidently lack the capacity to meet supply.
And Doctor,
the main problem that you should solve therefore is to look at liquidity. raise external liquidity to that threshold when you can regain control of the monetary policy instruments. So that's why the thing you need, the only thing Nigeria needs, is the only thing the world offers now: cheap capital. So Nigeria needs to, stop chasing shadows. I want to subsidize credit with the liquidity. So it's like a patient as the doctors has told you is anemic or has insufficient blood, and you're trying to treat his finger or his toe. Leave all that apart. The first thing you should do is to ensure that liquidity, which is blood in the system, comes to the minimum threshold to expect that all the parts of the body will function. I mean, the blood is too low, it could threaten life, organs can get damaged. That's what we are dealing with. External liquidity right now is so low that it's threatening stability and it's threatening growth. So don't try and fix anything else. Like your car is showing check engine. The oil is low. So don't do anything else. Put oil. So right now, Nigeria should look for liquidity, and that's the easiest thing to get in the current, global reality. Yes, you can ask.
I hear you very well. I hear you very addressing external liquidity. When we look at the situation where there are increasing fears that the coronavirus challenge could lead to downward spiraling asset values. I mean, take into context, China is already trying to mop up cheap assets, especially we're seeing that situation in Europe. Should Nigeria not be worried about disappearing capital and property assets values and even concerns around corporate bankruptcies?
When asset values were high, Nigeria failed to attract capital into our assets at the time. Yes, asset values are low now, particularly those related oil sector, our oil sector investment. It would have been better that you leverage those assets when the price of oil was 100 or when the price of oil was 75. Than now that it is 30. But you still have no alternative. You don't have the only alternative is for you to leave everything to collapse, to have another round of devaluation, have another round of recession. And I don't think that anybody is going to say that that's the choice we should make. So you should begin to talk about Nigeria's assets and what difference Nigerian assets can make, to the narratives. I'll give you an example. It's not some assets are worth opening up at any time. For example, Nigeria's biggest asset, Nigeria's biggest idle asset or underutilized asset, the government-owned lands and buildings in urban centers. You need to draw a list, catalog the buildings and that government owns in urban centers and ask questions about what's their market value and what's the value in use that the government currently puts them to. And you don't need to speak for long. You just have to have a list of prisons, which England, by the way, has been relocating like 1,000 prisons, to turn the old sites to commercial, residential or office buildings to raise money to pay down their national debt. So you have prisons, you have barracks, which America has a program, by the way, for shutting down military places and turning them to great places. So if you look at, the barracks that Nigeria maintains, we have barracks in the Ikoyi, we have in Victoria Island, we have in Maryland, we have in prime locations across the country. How much do we generate from using those locations as barracks? It's nil. You could relocate the barracks to somewhere more conducive to military activities and free this for commercial exploitation. And developers will pump money into it. They're not going to say to you that asset prices are low an asset that in current use is of no value. So if you open it up and you let developers pump money into it and repurpose it for lease to generate, revenue into government covers, you get non-tax revenue. It's hard for you now to raise tax revenue in this environment that the tax base itself is shrinking. So open up the assets, the prisons. You have no business having prisons inside the city. You have no business having barracks, in prime commercial land that you see you want to go and borrow money from another country. You shouldn't borrow money. You should relocate that barracks and use it to generate money into government coffers. Apart from lands and buildings that are idle that you could optimize, you could increase the returns on them in the way I've described. You also have a lot of corporate assets that the country has that we own 100% that we really don't need to own 100%. You don't need to own all the 5,000 kilometer pipeline 100%. Open it, let investment come into it, denominated. You don't need to own your national power transmission network 100%. Open it up, and use it to attract foreign investment. You can say the same about rail and the property hanging around all these rail stations and residential quarters across the country. So Nigeria may be income challenged. Our income may have reduced because of the bust or because of the end of the boom. But in the post-boom environment, the fact that your income has declined does not mean that you are asset poor. Nigeria is very asset rich. So we should stop this fallacy of just talking about revenue and debt in isolation of what difference our assets can make and the liquidity headroom that those assets can open up for us. So India in 2018 got $64 billion in foreign direct investments in 1 year. That's equity, not debt. Nigeria should stop trying to raise them. Nigeria should now begin put a plan together for raising equity. You don't service equity. Once you get them, you don't repay equity, and you have more than enough assets. I don't know of any other country that has so many backs in commercial sectors, or has so many businesses in commercial sectors. Or in that, Nigeria is super asset rich. You don't need to go and be reclaiming land from the ocean as we are in the co-Atlantic city. When the prime land that is on here in the Koyi in Kenya, you use them for its military, base. Move the bases and turn them to great places. Move the prisons and turn them to great places, and you will be rich. People will jump at that. And there's money. All over our diaspora is part of the people who are going to get that on that 8 trillion. So the earlier you put a proposal together for attracting diaspora remittances, the earlier you put a proposal together for attracting FTI, the better for Nigeria.
So, Doctor,
you very well about your postulations in terms of how we can address a singular issue you raised, external illiquidity. Now let's look at the region, the Africa Continental Free Trade Agreement. Is it threatened by this pandemic? What holds for Africa?
Now, the story of Africa is similar to the story of Nigeria. And the Continental Free Trade Area, like the West African single currency, has been on the drawing board for decades and is likely to remain on the drawing board for decades. Unless certain conditions are met, trade is a secondary issue. For you to trade, you need to be able to produce first. And for you to produce, you need infrastructure. Africa's infrastructure deficiency means that they can't even produce, much less trade. They export raw materials and import final goods, and they are missing on the global scene in the intermediates, in the trades for intermediates. For you to be able to add value to what you produce, you need infrastructure. For you to deploy infrastructure, you need liquidity. So African countries, if they want to cooperate, they want to have a continental program, let them have let their conversation right now. The continental trade area is talking about trade in goods, trade in services. It's saying nothing about how to cooperate to build infrastructure, just to connect one country to the other, say by rail. That's not on the table. You just think that once we sign an agreement and say we will trade. It's not true. There is no conversation about how to raise the liquidity to do infrastructure. And this would have been the most beneficial conversation. If African countries can work out among themselves a cooperation to get liquidity into Africa, to deploy infrastructure, trade will happen by its own. So Africa is in a similar situation to Nigeria. Our economic marginalization, you need to dimension them. You shouldn't take trade in isolation. You should take output. What are you capable of producing? So we are not just marginalized in trade, we are marginalized in output. Our output is declining. You know, you have growth reversal, you have economic deceleration, economic contraction. If your economy is contracting, why are you talking about trade? So, and this is because of the infrastructure deficit. And the infrastructure deficit is because of the liquidity deficit. So don't worry yourself about trade. Don't even worry yourself about output. Worry yourself about liquidity for infrastructure. Trade and growth will happen once you successfully deploy infrastructure. So the issue about the continental free trade area is about readiness. What is the readiness of the signatories to the African continental free trade area? Their readiness is nil. So speak about the readiness. What's the readiness of the West African countries for a single currency? It's nil, and it concerns liquidity. The Bible says money answered all things. So get the external liquidity, deploy infrastructure, and sit back and watch growth. Trade.
Thank you very much.
Thank you very much, Dr. Ayo Teriba, for your incisive contributions and interventions today.
And its quest for stability. And that will be all for this conversation today on Nigeria's economic discourse. Join us by 10 a.m. for a market review. Until we come your way again, thank you for watching. Have a nice day.